So we have financial position, previously we called as balance sheet. So financial position, if you see, they have property, plant and equipment, which has grown on in 1 year. So means that this year also they have invested some in the fixed assets or non-current assets, intangible assets. So here we can see that intangible asset is same. There's no movement. So what are the intangible assets? They can be your copyrights, your patents, your any kind of as precious things that are not having a physical shape, like as I told you, copyright, patents. So this we need to drill down that what is the intangible asset, and is it for the whole life, it is indefinite life, or it has life. So where we can use the impairment rules or amortization, because intangible asset will be amortized and a physical asset will be depreciated. So this can also be important, but these are net figures, so not given as full disclosure. Current assets, account receivable, prepayments, and other receivables. So you can see that receivables are increasing. Now receivables are connected with your selling policy, that how you are selling, because if you have given credits, then it will create a receivable for you. We have to see KCTP receivables, what are the type of receivables that we have. Cash and cash equivalent. So you can see there is a slight positive upgrade in the cash. So if I take the current assets and if I take the current liabilities here, so I can calculate the liquidity. I can see the pattern that company is able to sustain in a short run. Means ability to pay its short-term obligation. I can calculate working capital. I can calculate quick ratio, which is current asset divided by current liability and minus your stocks. I can calculate more close ratios towards cash to see that this company will sustain in short run or not. Opposite, I can take the non-current assets, right, and I can divide with equity, and even I can take with sales as well, means turnovers, asset turnovers, return on capital employed, very orthodox, obsolete ratio, but we always use ROCE. It's very common, return on capital employed, and return on equity. Then RI is a new ratio came. A new means like it's another ratio, residual income. We want to see that the investment has a target rate or not. So these all ratios are very easy. I mean, we can revise for you ratios and we can see. I see more than a ratio is the concept that I want to see this company will be able to sustain in short run, long run, how it's doing with profitability, how it's doing in terms of uh, purchase turnover, sales turnover, inventory turnover, means how many days it takes for this company to sell the inventory, for example, to receive money from the customer, trade cycle, which you call working capital cycle. So all these financial analysis, typical topics we can think when we are studying this case. So if I need to involve myself, giving my opinion, he can ask like, how does the financial performance looks? You are a finance manager of KCTP. What is your analysis about its short-term ability to sustain, long-term ability to sustain? This kind of questions could be really interesting, and I'm sure you can easily do that. Equity has different types. Just to revise you, we have Here it's a very simple, but we have common equity, common shares, which comes in share capital. Share capital has types like common shareholder, ordinary shareholders, preferred shareholders, right? And there are types of warrants and guarantees and options. Anything can come here. Revaluation reserve 620, which we see here. You saw here also somewhere revaluation reserve, right? So you can see that there is a revaluation reserve they are creating. You know what is reserve? Reserve is a provision that you create in advance. That, for example, if I feel my assets, company assets are old and I have to buy a new asset, so first I will keep a reserve out of profit, that this will be go as a fixed asset replacement reserves. So reserves are, we use it for keeping our needs, long-term, short-term needs. Retained earnings are the year's earning, which you can cross-reference with your income statement. So how much has been retained? You have given a dividend, so whatever is left is in retained earnings. You can see that non-current liabilities mean these are long-term loans that KCTP has. So, so now I'm thinking that why they have loans. Like it's fine to have loan. It's fine. All the business, this capital economy is going on the concept of loans. But is it their share capital funding is not enough that they need loans, or are they funding, are they doing some projects which require extra loaning? And then I can make a debt equity ratio. I can talk about optimal capital structure, means how much they have as a equity and how much they have as a debts. Now, in America, for example, or in UK or Europe, we know that taking loan is much better strategy than to issue the equity. Why? Because when we issue the equity for floating in stock exchange, it's a long-term exercise. It requires a lot of regulations by a regulator, and then you need to hire lawyers, accountants, underwriters. They will make, and then you need to find a primary investor in a primary market who will resell in a secondary market, and you will lose a control on your you can say your ownership, as well as we saw in this case that only 20% is with the university, 80% is free floating. So means significant control is where, means the original founders, that if they say, for example, if I keep 51 with me or even 35 with significant control, that our control will work. So these are very, very important dimensions to think in order to debt or equity capital structuring. So we will definitely talk about the structuring, how they structure, because we are strategic managers. Strategic managers thinks out of box. They think that why we are losing money on, say, why we are paying interest, for example, why don't we issue equity? Okay, if we issue equity, what is the comparison with the debts? So debt has a problem, like loans has a problem, that even if you are in cash flow crisis, if your installment is due, your bank or your public, like if it's a bond, so is not going to leave you. You will be in a bad situation. But in terms of dividend, a very basic legal rule that if there is a profit, there's a dividend. If there's no profit, it may, if it is accumulative, it will roll over next year, but you don't have a stress on cash flow. You don't need to do any much stuff on that. So this is how the non-current liabilities. So we can see what is our capacity to pay long-term liabilities as a solvency or gearing. A very important thing is a leverage. What is your cost of fixed debts? So these are some terminologies. I'm sure after doing 2, 3 mock exams, you will be super fit and you will be able to think so sharply in that. As I expected that we can't compare only ourselves with ourselves. So he gave us a major competitor now. So KCTP is the largest technology park. It has several major competitor, including Sci Park. So Sci Park is a competitor which has a campus of a similar size, right? So there it's my satisfaction is there that we are comparing apple with apple, mango with mango, means similar size. Because if you say smaller size, I do can calculate ratios and analyze, do a financial forecast, but for financial analysis, but again it should be similar size, so that's really important information. And they are approximately 15 miles from KCTP, so based on an infrastructure 15 miles can be easily covered in 25 minutes. So means they are around the same infrastructure that we discussed. There is an airport, there are transport, there is a subsidized buses, there are hotels where people can come and stay, so they enjoy the same privilege. Now, in terms of revenue, if you see their revenue was for 370, so they grow. So we can calculate a ratio like a percentage change. I told you common size statement is always very good. You know, you make 100% sale and then expenses. So you can see sale has increased, say 20%, 10%, 7%, 8%. That makes more sense. So I want to come just to revise you. They have in 2019 they have 417 million sale, and if I go back and I just remind you 479. So 479 versus 417. So KCTP sale is still okay. But of course, same thing I told you for KCTP, Sky Park, we have to divide, we have to see GP sale ratio, operating sale ratio, then later asset sale ratio, asset turnover. So these ratios will tell us that who is the most stronger business and what is the market industry trend, like trend of the competitor, of course, and what is your trend. So overall, I can see based on these two competitors that this is a good business. It's a business like which is not in loss, which is in demand, and of course, full analysis will create good aspects, and of course every business has bad aspects as well, right? So we need to our strategy for any analysis is this is good, this is bad, and conclusion that bads are more, so no, if goods are more, then yes. This way we need to work around. So cost of property management is there, marketing expenses, administrative expenses, operating income, financial expense, and this is on the loan that you take. Generally, these will be the finance expenses. Profit before tax is really important item, because if you take, say, for example, 44 is your financial. So for say, for example, if your operating profit is very less to cover this. So new leverage cannot be created, right? We cannot create a new leverage if it is too less the profit before tax, before interest. And profit for the year is this one. They have consolidated changes in equity, same like this. So you can see their initial capital is 450 and your capital was approx 5,000, right? Your means you are KCTP, he told you you are KCTP. So you are KCTP and this Sky Park is a competitor. So in terms of shareholding, 500 difference. Reserve, as I already told you, these are kept for some purposes. And retained earnings is here. Dividend is, you gave how much dividend? 70 approx. 74 is your dividend. So means you are making your shareholder happy by giving a better dividend from your competitor. However, you should know that if a company is giving dividends to the shareholders, mean that they are not investing in the operations. They are not expanding. They are giving money back to the shareholder as a return on their investment. So this is also a criticism that you need to have a better dividend policy. And as I told you, we will discuss the key aspects of the dividend policies. Here we are for the financial position. As we discussed, that financial position shows what are your assets, liability, and equity. So property, plant, and equipment is growing. Intangible assets they do have, which is same like KCTP. Current assets in terms of receivable grown. So we need to see that this receivable is on which items. Cash and cash equivalent is also growing. Equity is still, reserve is increased, retained earnings has also been increased. The money retained after distributing the expenses, these are the retained earnings, which include the profit for the year as well. Loan, they also have a loan. So so also they make same like debt, how many debts you have, how much equity you have, trade payables and tenants deposits. So this is the also increasing. And deposits are also your liability because you have to return them. So any deposits you take from your tenant will go in your deposits as a liability, and in the tenant book it will be in the receivables. Current tax is here, so more income, more tax, that's how it works. Total equity, and so your competitor is a company worth 6.429, and if I see your worth 7.267, so you are slightly better in your competitor boots. Moving forward, very interesting graph. We will spend some time on it. First, I will read it for you. So KCTP, because it has been floated in the stock exchange, right? So that's how it has a share price, right? Since 1999 till 2020, there is a share price movement, right? So, and very interesting thing after this graph is written, KCTP beta is 0.9. So let's discuss a bit of beta. In finance, we have some words beta, gamma, alpha, delta, which has their different meanings. So every situation has a different word like alpha, gamma, beta. Beta is a measurement of volatility. So when we see a share that's moving up and down, we say it's volatile, means fluctuating, prices moving up and down. So how it is measured, like if I got a fever, so you need to measure my temperature with a thermometer. So same way, if I want to see what happened to the share price, I have to use a term called beta. Now normal beta is 1, means 100 divided by 100 is 1, for example. So equal change in my share and equal change in market index. If it is equal, then it is 1. Because as I told you, equal 100 divided by 100 is 1. So normal beta is 1. Normal beta means that market is also volatile, your share is also volatile, equal beta is 1. But there might be situations which comes in Apple, Samsung, Google, and Tesla, for example. These are strong companies. So what had happened is sometime market is volatile, market is dropping more, their share is strongly standing. So means that now beta is not 1 because it's an unequal change. Market index is decreasing more and your share is stronger. Then we say beta is less than 1. So when he says beta is 0.9 means that your share is stronger than the market. So this is a very good indicator in terms of KCTP, that KCTP share is stronger than the market index. That's important. But it can be vice versa also. If your beta goes, say, 1.31 means above 1, below 1, and 1. These are three symptoms of the beta. Beta is a measure of volatility, only applies on shares, stock exchange, and the movement of the shares. Okay, so the graph is in front of me. If I see it is going how? This is the average. So 14 is the average. And I can see sometime it goes 14.2, sometime it goes 13.9, then sometime it touching 15, and in the middle onwards. But you can see that this share throughout last 5 years fall between 12 to 15 currency, dollar, for example, dollar. Like it is always last 5 years, and I can see this is to be very open, this is a useless share, because I told last time there's a share I was predicting watching Neo, the Chinese company. 4 months before it was $9. Today it is $49, $48. That's the share that gives like this. So means that now we need to see here the question can come that what are the reasons that the share price is within a specific lower and upper limit, like say 12 to 15. We need to see. So means that market sentiments about KCTP is unable to excite the shareholders, because when people excite about the performance, new dividend, new performances are coming, so they start buying the shares. So they are not the eye of some specific advisors like JP Morgan, and so this is a very, very, if you see income statement, balance sheet, changes in equity, all looks good. But when we see the marketability of the company, I can see no, this is a very, very depressing record of the share price over the last 5 years. So here the topic will come, of course, that what makes share prices up. And so we need to know these points, which somehow I discussed, that you need to excite the market, you need to bring up dividends, you have new plans, the market should feel because we took this case as a developed country. So developed country markets are efficient markets, which is directly connected with the information, and consumer is well informed. So if KCTP is doing really good, innovative, nice, it will translate into a movement of the price up. Price shares will go up. So that's quite interesting part, and it will affect its dividend growth model, share debt to share, total liability versus total equity, why market movement is not so aggressively up. So these kind of conceptual things we need to keep in our mind. Okay, well, this is you have a question.
This is Khalid. Dr. Musa, you just have said earlier that some compare also with their benchmark. So considering the share price, as you said, it's not really showing they are doing very progress in terms of the share selling. But if we compare to the market that they are in, for example, could be that is also a factor wherein it says that, in that type of market size, normally that is the range of share price is moving. Thank you, Doctor.
Yes, that's the beginning of, you can say, a very good point. So that everyone can think about that, look at the market. For example, this is the KCTP share price, but he didn't give us the share price of Sky Park, right? So you rightly said that if we want to analyze the share KCTP share history, then I should have a competitor history also, industry history, maybe all, as you said, maybe all KCTP of competitors has the similar set of share movements. So this is a very valid point. Along this that, but like for example, you are an investor. I throw you another question. So, and you are giving 3% to, suppose I am a shareholder, you are KCTP, and you are giving me every year 2.5% returns. And if I know that if I'm an aggressive investor, I can go to a stockbroker. He can give me 7% average on a little bit high risk products, right? So it depends. Here the discussion will come that what kind of investors are they? Are they aggressive, moderate, or they are conservative? They just or they are technology lovers, or real estate industry moving that way. So you are right, and that's what is an open discussion that we will keep doing as the activity and task and the mocks will come. That's great. So let's move forward with this. Now here, formally, all the statistics are completed. Now we are going towards the new information.